So budget 2023 was announced a few weeks ago, 14th of February, Valentine's Day. So our finance minister, Deputy Prime Minister mentioned that he will give us a Valentine's Day gift. So later I will run through some of the gifts that he so-called giving to us. But today, budget talk, I will not focus on the other areas like GST voucher, CDZ voucher and all that. I think those are very personal thing. What I want to focus on are some of the scheme or grant or tax related matters. So it's very focused only on a few topics. So as you can see here, I will cover a few things that affect businesses like this enterprise innovation scheme. There are a series of enhanced deduction under the scheme. Go through with you and to see where you can actually take advantage of this scheme and get a lot more tax deduction. I will also talk on some workforce policy, may not be directly tax related, like CPF rates adjustment for senior citizen, also the lifting of the CPF ceiling for those earning 6,000 and above, and also some new initiative by MOM granting paternity leave, infant care leave, and so on. I will touch on this, even though they are not really tax related, but I think it's useful to know because as an employer or as an employee, you should take note of some of these new HR policies. I will also touch on a bit of a corporate tax because this year actually not a lot of things offered in the budget for corporate tax. There are a lot of new schemes and all that, but there are many for very specialized kind of industry, marine industry, financial services industry, which, like I say, I won't focus them in today's talk mainly for SMEs. Next, I will also cover on the personal income tax. There are some also some major changes like the working mother child relief and so on. Grandparent relief, there are some revision to some of the relief. Last but not least, I will then touch on the property levy, right? Again, if you recall last year, there was some adjustment on the annual values and so on, stamp duties and so on. This year, again, they are making some adjustment on the property, about the buyer stamp duties levy. And what is interesting is that in the past, the government focused on the residential property, but this year budget, they also have put in some more buyer stamp duty for non-residential. That means if you are buying industrial, commercial, retail, up to a certain value, it will be affected by the changes. All right. So this is basically a brief summary of what I'm going to talk today. We'll now move on to the more in-depth narration of some of the things that we're going to talk today. Okay, give me a minute. I think the screen is freeze. Yeah, okay. Okay, so for the Enterprise Innovation Scheme, like I mentioned, these are some of the tax scheme that are introduced in this budget for various type activities to allow businesses to engage in some of this activity and enjoy higher tax deduction. All right, so there are things like qualified IP, which is the intellectual property rights, and there are also in terms of acquisition of IP rights, and also so there's two main areas. On top of that, there are also some deduction for training expenses. I think this will probably benefit more people because it's training expenses. The other types are mainly very focused on intellectual property rights or some innovation projects and so on, right? Okay, first off, we will look at this enhanced deduction for research and development projects that are conducted in Singapore. So there are key things you need to take notes of. This is only for R&D projects that are done in Singapore, not overseas. Okay, so what do we have currently? You are allowed some deduction on consumable, 100%. Some staff costs, some R&D may involve your staff giving inputs So in terms of staff cost will be the man hours. So for this deduction to be available to you, you need to track the time, the time that your staff spend on the R&D project. So you have to lock in the time. It's not like you just put in one figure and then go and claim. So be very careful when it comes to this deduction, that you have to keep a time log of your staff that are engaged in this R&D project. So it's very important. So not just like you go and say, oh, 5-man days, 7-man days. You have to show records that your staff have spent so many hours per day or a certain day to get involved in this R&D project. So these are some of the administrative things that you need to take note when you want to claim this enhanced deduction. Normally for research project, there's no deduction, right? The tax law is very clear. Capital or expenditure that are not relating to any income producing activities, you will not be given deduction. But however, to encourage R&D, the law have been amended to allow some of this R&D expenditure to be claimed. So currently you can deduct 100% on consumable, and in the case of staff cost is 150%. So it's quite generous even at the current, like I say, because normally you can't deduct, right? But they allow you to deduct for R&D because they want to encourage businesses to go into R&D. So what we see in this budget 2023 is that they're going to enhance it to 400%, right? 400%, what is 400%, right? So for example, if you spend $1,000 on a consumable, under normal circumstances, you can claim 100%. So our corporate tax rate is 17%, so you can actually enjoy $170 of tax savings, right? 1,000 times 17% tax rate. So you get a $170 tax saving. So for $1,000 under the current scheme, you get a $170 deduction. But come this year onwards, so it's this year, no, 2024 YA. So this year onwards, you instead of claiming $1,000, they say you can claim 4 times, which is $4,000. And $4,000 you multiply by 17%, that works out to $680 of tax savings that you get. So that means when you spend $1,000 on R&D, you get back $680 in terms of tax savings. So your actual outlay is only $320 out of the $1,000 that you spend. So it's a very generous scheme, right? You look at it, you spend $1,000, you get back $680, right? The same thing for staff cost, 400% deduction, but they do have a cap of up to 400,000 for staff costs, right? So just take note of this. So this enhanced deduction will be the same in the next few activities I've mentioned. So you will take note that it's quite generous. For every $1,000 you get back $680. Okay, next is the this deduction for qualifying intellectual property registration costs, right? So what are these? So if you have patented some work processes, patented some discovery or engineering methods, you can register it, and the cost of registration allowed for deduction. So you get lawyer to file your IP registration and things like that. You can get currently 200% up to 1,000. But going forward, you will similarly, like what I mentioned earlier, you get 400% deduction. So again, very generous, right? Like I say, you spend $1,000, you actually get back 680. So similarly, for IP registration, so this involves all your legal expenses, or you get a consultant to help you to do the registration, file the application of IP rights. You do get deduction. Okay, next also related to IP rights, intellectual property rights. Okay, in the earlier case is that you develop your own, right? You invented certain processes or procedures, and then you go and register it, right? So this one is you buy an IP rights, right? Like, you know somebody who can like vaccine, our COVID-19 vaccine. How they come up with the vaccine, and if someone want to buy the development of the vaccine, this is where they get a deduction, right? So this separately different from just now. The one earlier one is you develop your own IP. This one you go and buy it, right? So similarly, this one you are granted 400%, but there are some condition to it. Your annual value of your business must be at least 500 million. So this is not something everybody can qualify. Okay, another catch regarding this acquisition or licensing of IP rights is that when you buy, there's a value, right? The seller will quote you a value, and then if you're agreeable, willing buyer, willing seller, you buy it, and then using that value, you may then go and claim a deduction. However, there's a catch to it. Whatever value that you come up with, if you're aware, IRAS actually want you to do a valuation. That means you need to get a valuer to value this acquisition that you have and whether they are actually worth what it is. So it's some kind, just do not want you to overvalue IP rights and then claim a lot, right? So this one a little bit different from the earlier one. This one you may need to do a valuation, right? Okay, next, this one will apply to many of us businesses, because in the earlier one are very specific, like intellectual property rights, R&D, and so on. This one is for training expenses. So if you are sending a staff for training, again, you can see that they instead of the normal 100% deduction, now you get back 400%, right? But there's a cap up to 400,000, right? Okay, the other qualifying condition is that it's not all courses you can qualify. Only courses that are eligible for skill future funding or alignment with the skill framework. So this one you really have to go to the skill future website and go and look for the courses under skill future. Then you qualify. It's not any other courses that you spend money and then you get a deduction. So it must be courses that are eligible for skill future Singapore. So to take note of that, right? Okay, the other one is tax deduction for innovation projects. Again, as you are aware, all these years, government pushing for us to businesses to spend more on innovation, productivity projects, and so on. So again, it's a continuation. I think in the past we have the PIC and all that. So this is another type of instead of giving you a grant, it's an enhanced tax deduction for innovation project. But this one a smaller quantum, as you can see, it's actually capped at the 50,000 only, right? Qualifying innovation project for 4 years, right? So you only can you cannot do so on your own, unfortunately. Like for this innovation project, you need to partner with some partner institution, our polytechnics, ITE, or the A-Star Simtech. Right? These are some of the partnering institution that you have to work with in order to qualify. What are some of the activities that you can qualify under this innovation project? Again, R&D activities, engineering, design, creative work, and so on, IP related, software development, data activities. So if you have read the paper, I think it's on Tuesday, or even Wednesday, I can't remember exactly. While they debate it in the Parliament, in the Committee of Supply debate, one of the example they cited was Ngee Polytechnic, right? Involving partnering with a business in precision engineering, right? So that kind of activity will come under this kind of innovation project deduction. Okay, like I mentioned, these are not really many of us involved, but if you do want to go into it, you have to work with some of these institutions, polytechnics, ITE, and A-Star Simtech. Okay, so we talk about so many of these schemes and so on, and tax dollar that you can save. Like I was mentioning, 400% deduction is for $1,000. For $1,000 that you spend, you actually get back $680 in terms of tax savings, right? But you may think that, hey, what happens if I don't have profit, right? I making losses. So and I'm not even paying taxes. So you give me this 400 deduction is of no use, right? I won't benefit from this 400% deduction because I have losses, I still have unclaimed capital allowances. I will not benefit. So if you are in that kind of situation where you don't have a profit for or taxable income to be taxed, you can actually then convert it to cash, all right? So you're allowed to convert 20% of the expenditure to cash, okay? But there's a cap at 100,000, and they also further cap at 20,000 per year of assessment, right? So it gives some businesses who are not paying tax because of their losses, or they still have some brought forward losses or capital allowance to claim. So in fact, they are really not paying taxes. Another avenue to enjoy some benefits, but in the form of cash at 20%, right? So who are those that are eligible? It can be companies, private limited, registered business trust, even partnership and sole proprietor, right? You must have at least 3 full-time local employees. The local employee means Singapore citizen and PR, and they are making CPF contribution of at least 1,004 for at least 6 months. Okay, you look at this 1,004, where they come from, all right? This 1,004 is not a magical figure that they pluck it from somewhere. You are aware MOM, when they grant you work permit or S-Pass, in terms of the local employee headcount, you must at least pay an employee of 1,004 before you can qualify as one headcount. So this 1,004 actually come from there, lah. So I think nowadays they don't want to count with too many figures. So it's easy for you to remember. 1,004, 6 months, 3 employees. You can then convert the things that I mentioned earlier into cash. For example, training. So if you spend some money on training and you don't have tax to deduct, so you can actually opt for 20% cash conversion to get back from your training expenditure that you spend. So all this will help you in terms to defray some of your costs lah. If you are not tax paying kind of businesses where you are having losses and so on. Okay, next, there are also this is not new, enterprise development grant. These are ongoing grants that government have given. There are some enhancement. There are also some extension of the scheme. So I just briefly run through. Like I said, these are not new. They have been in existence for a while. Like HR branding, financial management, innovation, productivity, market access. So they have been around for a while. Okay, so the only thing is that the subsidy or grant that they are giving you is coming to an end, right? So you look at it, this EDG support scheme will come to an end by end of the month, right? 31st March. So if you are thinking of taking advantage of this scheme, you need to quickly apply by end of the month. They are granting to food and retail sector, F&B and retail sector. So what are some of the things they are? I mean, just briefly run through. For example, for the HR project that you can do, it's basically, it's not just about coming up with some software to help you track OT or wages, but more deep dive into the company HR policy, the HR strategy and so on. So where they involve a lot more of planning, your company compliance with certain regulatory requirements and so on. And then the other area will be the marketing part, where you can then tap on it. So this will involve like getting a consultant to help you to do gap analysis, to see where are your weaknesses, where are your strengths in the market, how are you comparing to your competitors. This is where the consultant will go into a very in-depth research into your business or industry, and then make some recommendation, whether it's a local or venturing overseas. So up to this point, you get 80% subsidy for this type of activities, all right? And they are also this sustainability related project is something new that they encourage you. As you know, our government is going strong, very strong on this green initiative, getting businesses to really work on sustainability. So they are also giving you 70% grant, right? So these are again for some of the grant are expiring soon, so do take note. And if you need any help in terms of this EDG grant, do let us know. Send us email. When you receive this Zoom link, there's an email. You can send it back to us, and we can see how we can help you to get some of this EDB grant. I think the common one will be the HR, marketing, and so on, right? So, but I just want to emphasize this: all this HR or whatever or branding is not just putting a website. So, it's a more in-depth look into your business. Okay, next, I will move on to workforce policy. Like I mentioned earlier, this may not be directly tax related or anything like that, but it will affect you whether you whether you are employee or employee, right? So this is important for you to really take note. Some already are already in progress. Some enhancement or new initiative. Okay, so the first thing that you see here is the CPF contribution for senior worker. So this is new. It's not, sorry, this is not new actually. In budget 2022, the government already announced the changes to the CPF contribution rates for workers that are 55 and above. So actually this already been implemented since this year, January onwards, all right? Okay, I think before I move on, there's this question about whether green cost incurred can claim tax deduction for corporate. At the moment, there's nothing in terms of tax deduction, right? Unfortunate for those green initiative, there's no specific tax deduction or scheme. But however, if you are doing some spending some money to enhance your company compliance, there are certain deduction I mentioned, certain grant to help you. So tax deduction, no, but I think some grants mentioned under the EDB, there are some support from there. So anyway, back to this CPF rates. So as I mentioned, the 2023 January starts already. New CPF rate have been implemented for senior workers. But do take note that the government is subsidizing some of these increase in CPF contribution. For example, in some cases, the rates can be increased by 1.5. Government will give you 0.25 subsidy. So these are ongoing, right? So you may say 0.25 is not very substantial, but every dollar helps. Okay, so so you think that after last year increase of or this year increase of CPF rate for senior worker is the end, but no, not the end. Next year onwards, there is further adjustment for worker that are 55 and above. So I can see from the chart here, there are further increase of 1.5% for those that are 55 to 60 and so on. Government will continue to provide support at 0.25, right? Not a lot, but at least cover some costs. So it's important for you to take note of these increases in the CPF rates, right? I mean, your budgeting, in your labor cost budgeting, these are some of the consideration that you have to make when you do budgeting. Depending on your business, the profile of your workers, some of this may add up a bit of cost to you. When you, let's say you have a bigger pool of worker that's 55 and above. So these are additional costs over the next this year and next year that you will see. Okay, next, this one may not affect everyone. This one affect those who are earning 6,000 and above. So as you can see, the CPF monthly salary ceiling will be lifted for those who are earning 6,000 on a gradual basis. It will start 1st September this year, increasing from 6,000 to 6,003. So what happened now is that let's say you are drawing a salary of 8,000. You don't contribute CPF based on 8,000 currently. You only contribute CPF based on 6,000 because that's where they set the ceiling, right? So even if you earn 8,000, 10,000, your CPF contribution is based only on 6,000, right? So that's where the current CPF ceiling is being set. But come September this year, it'll be moved up to 6,003. All right. So that means instead of sorry. So instead of 6,000 now lift to 6,003, and then gradually we increase up to 8,000, all right? But the strange thing is, I'm not too sure whether you're aware, there's always an annual CPF ceiling cap, all right? What is this annual salary ceiling that's being set? It's basically set at 17 months of the salary ceiling. So let's say currently it's 6,000. So the CPF rate will be kept at, and on an annual basis, is 17 months time 6,000, which is 102,000. Right. So you may ask me, hey, why 17 months? Basically, is monthly salary, right? If you're giving money, say 12 months plus another 5 months of bonus, right? It's like that, 12 months plus, or in CPF term, 12 months plus 5 months of additional wages. Okay, so why do they have this cap on the 5 months? Because in the past, there are some very smart people. They don't pay themselves very substantial monthly salary. Instead, they pay themselves a very big bonus. Can be 10 months, 13 months. Right? Okay, the reason why this is so because the additional wages are not subjected to, in the past are not now. In the past, additional wages are not subject to any cap. So when you contribute more CPF, it can actually deduct against your tax liability, right? When you file your personal income tax. So there's some very smart people, manipulating their salary and bonuses. So many years back, government realized that, so they cap it to 5 months additional wages, 12 plus 5 months additional wages. So you can see even when we adjust the ceiling, the cap, the annual ceiling have not adjusted. They still want to keep it at 102,000, right? Maybe for fear, again, for people manipulating the system, right? They did not explain why, the government did not explain why the ceiling did not move for the annual one. Okay, so just to show you what is the impact to you as an employer or as an employee, right? So in this illustration, let's say your salary is 8,000 a month. Like I mentioned, if you draw 8,000 a month, currently CPF rate that you are paying is capped at the $6,000 level. So you only take 6,000 times 20, 6,000 times 17, which is employee 20%, 1,002, employer 1,020, 17%. But however, for September onwards, because of adjustment, you find that employee now have to pay 1,260 and employer have to pay 1,071. Okay, so not a very big jump. That means for the employee, take home pay will be $60 less, correct? Because it used to be 1,002, 6,000 minus 1,002. That's why you take home, right? 4,008. But now you get less. You don't get 4,008, you get 4,740. Take home pay less. So it then will affect your pocket, right? So if you need some money to pay for your motor car installment or spend money, then you have less take home pay. More money will go to your CPF account, right? And you have to wait until 55 to get it. So I can see gradually, when you hit $8,000, which is in 2026, the employee contribution will now be 1,006. So if you look at the current 1,002, and you look back and you look towards 2026, you actually will be take home $400 less. Quite a lot, $400. Oh, that means you cannot spend this $400. This $400 will go to your CPF account. All right. So for the employer, what happened? Employer, you will see that your CPF cost will increase, right? Because you can see there is a gradual increase in your 17% because the pack now is more. So again, like I mentioned earlier, you have to then have to when you do budgeting for your next salary adjustment or that, you may these are part of your cost already. You have to pay more for the 17% because now the bar have lifted up. Okay, next, this progressive wage credit scheme. This progressive wage credit scheme is not a new scheme. It has been announced last year already. All right. So why am I talking about it now again? Because there is an enhancement. There's an enhancement. But before going to the enhancement, I just want to recap what this scheme is all about. Basically, this scheme is where the government will come in and help to co-pay the salary increase that you give to the staff between the year last year 2022 to 2026. So for 4 years, the government will co-pay the salary increase, which is very substantial. Later, I'll show you the illustration, right? So who will qualify? Which type of employee will qualify? Employee that is drawing a monthly salary of 2,000 and below, tier 1. And then tier 2 are for employee that are drawing between 2,005 to 3,000. So there's 2 tiers, 2,005 and below, and 2,000 to 3,005. 2,005 to 3,005. And the other criteria will be the increment must be at least $100. And later I will explain to you how to take advantage of it, right? You may say, wow, must increase $100, right? But as an employer, this may hit them in the pocket, right? But later I will explain to you. Okay, and this co-payment will be done over 2 years. That means they don't just subsidize you for 1 year, they do 2 years, right? So that you can pay more to your staff, and government will help you cushion some of the increase over 2 years. Okay, and the beauty of this scheme is there's no need for you to apply, right? So what happens is that because only local employee will qualify, right? So only local employee will qualify. So all this can be picked up through the contribution of CPF. So every month when you file CPF for your staff, you have to put in the monthly salary, right, in your CPF submission. That's when they will track. Right? They see an increase in salary over a period of time, then you will get the grant from the government, right? So what are the conditions? Okay, so very important, you must take note of the condition. The CPF contribution from that means the staff that you are paying can only receive CPF contribution from a single employer for at least 3 calendar months in the preceding year. Okay, this is very important. You need to take note. That means you cannot manipulate. Right? Some people may have one single employee, but he may be under payroll of 2 companies. If you have an employee that is under the payroll of 2 companies, you won't qualify under this scheme. Right? So because sometimes you need headcount, right? So this employee will appear in 2 companies' CPF contribution. So this to address this type, employee appearing at 2 different companies to chop up headcount, to do work pass at quota and all that, right? So very important. This employee can only be paying CPF under one single employer, and must be on the payroll for 3 months at least in the qualifying year, right? The next catch is business owner won't qualify. So if you are paying yourself a salary and you paying CPF, under your company CPF, you won't qualify. So you cannot increase salary for yourself. Too bad. So if you are a business owner, you cannot increase salary to enjoy this. So that disqualify all the sole proprietor, director, or partner, or if you're both a shareholder and director, you will not be eligible. All right. So you cannot increase your own pay. Right. Okay. So what is this scheme all about? Okay. Like I mentioned, this scheme is not new. Actually, it was announced last year in budget 2022. So back then, the subsidy was 50% for 2022 and 50% also in 2023. But now they increase it to 75%. That's a very substantial amount, 75%. Similarly, for the second tier, from 30, they increase it also. Right? From 30, they increase it to 45. So there's a lot also. So how does it work? I will show you the an illustration, so that you better understand how this scheme works. And I must say this scheme is very good. It will really help you save some money, and at the same time make your employee very happy, right? It's a win-win for both employer and employee. Okay, so in this example, I have an employee that's drawing a salary of 1,008 a month. All right. So as you can see here, we start off with 2021, where this employee is drawing 1,008. So if you were to give this employee a $100 increment in 2022, his salary increased to 1,009. What happens is that because of this $100 increment you give, the government will give you $75. Very good, right? You give employee 100, government pay you 75. So the actual cost to you is only $25. Right? So in terms of over 12 months, that will be nearly $900. All right. So how it works is this. So let's say now you're doing a performance appraiser. You want to decide how much to pay your employee increment. You're thinking only paying an employee $80. Then I say, why not increase it to 100 or even $50 increment? Why don't you up it to 100? Because if you give $50, $80, you don't get subsidy. So this $50, $80 will be a cost to you straight away. But if you give $100 increment to your employee, government will pay you $75. So the actual cost to you is only $25, which is better than you give $50 or $80 where that one will come all from you, no subsidy. So you give $100 increment, your employee happy, you also have a lower cost in terms of the increment that you're forking out, because your cost to you is only $25. All right. So this increment subsidy will also move on to the next year. If you look at the example in 2023, the government will continue to subsidize the $100 increment that you give in 2022. So let's say in 2023, you increase the staff increment by 100, from 1,009 to 2,000. So there'll be two increments, right? You look at it. One increment you give it in 2022, $100. Another increment that you give in 2023, another $100. So total increment over 2 years is 200. Government pay you 150. So for every $200 increment over 2 years that you give, your actual cash outlay is only 50 a month, because government is going to give you $150 back. Total annual payout you get is 1,008 per employee if you give a $100 increment. So it's very substantial, at least for 2022 and 2023. And then come 2024, 25, 26, subsidy drop to 30, and then the last year is 15. But if you look at it, it's still very substantial. For $100 you give, you get back $30. So the actual cost is only 70, right? So it's still higher than your, still better than the $80 increment that you want to give. All right, so take advantage of this scheme over the next 4 years to get the max subsidy from this scheme. Right, very useful. I really encourage you to look at this when you do your staff appraisal and increment. This will really help you absorb some of the costs. All right, so study this. Right. Okay, next, some not money related, but more some benefits that the government encourage. Okay, this government paid paternity leave is not compulsory. It's on a voluntary basis. It will be given to working father. Right? Encourage a father to take on more family responsibility. It will increase from 2 weeks to 4 weeks. And it will apply to children born on and after 1st Jan 2024. Okay, the only thing I question this is why not immediately, why not 2023 starts? Why drag until 2024? All right. So those baby born this year can't benefit. The father can't benefit for baby born this year. Only for baby born in 2024, then you get it. Okay, one thing about this paternity leave thing is that it's government paid, right? It's government paid. Take note, government paid. That means after you grant the leave to the father, which is employee of yours, 4 weeks, you actually claim back the salary from the government, right? So this is government paid, but it's voluntary lah. It's up to you. So it's a policy that you can decide. HR policy, you decide whether you want to grant it to your employee or not. Right? But it's government paid. Right? But the next one, this one is unpaid. Now, these are unpaid infant care leave. Right? These are for child that are 2 years and below. Right? These are for child that are 2 years and below. Increased from 6 days to 12 days for both mother and father. Again, this is only for those born January 2024. It's not immediate. Right? So, but this one no pay. You grant, that's it. Right? Government not going to pay you back. The earlier one, the paternity leave, that one different. The government pay you. Okay, so next we move on to some tax rate again. Back to income tax, but corporate tax rate. Look at this minimum effective tax rate. I think this is something coming, but mainly won't affect most SME, mainly for MNC who operates in many multiple countries where there are some form of tax equalization over the different territorial, and also encouraging companies to do more in terms of voluntarism, and also some capital allowance or deduction claim that are being exaggerated. Okay, this one I mentioned probably won't affect many of us SME. This only apply to SME or SME with annual value of 750 million euro. They will start in 2025. What this means is that the effective tax rate of these companies or this MNE must at least be 15%. All right, so you may ask, Singapore already 17, so are we too worried about this? Yeah, sometimes, because if everybody is paying tax, that means not just Singapore. If many of the countries are implementing this at least minimum 15% tax rate, it will mean then that may not be many incentive to come to Singapore, right? Because if the other companies are offering this 15% tax rate. So this could impact us. Could impact us. Okay, next is to encourage volunteerism and philanthropy. Actually, currently, when you do donation to Institute of Public Character, you will get a 250% tax deduction. Right? This is not new. It's just that now they're going to extend it. Because all these tax 250% tax deduction actually have a lifespan. It's not like normal tax rate. This one actually have a lifespan, actually coming to an end, but now it has been extended to December 2026. Right. There are also other form of donation, because sometimes you don't just donate money, right? You can also spend time, like encourage an employee to contribute their time to help the underprivileged children, like giving tuition, or going to do cleaning, cleaning up the houses of some senior citizen who live in the rental flats and so on. So this is where your companies spend time instead of money. So now they actually allow you to quantify the time, the cost that you involve into dollars, and then allow you a deduction. All right. But they do cap it to 100,000 per year, right? Now, right? So again, for this activity, if you want to claim it, you have to keep a time log, so that you know who are the employee get involved in this project, how many hours they spend in doing these charitable activities. So you have to lock in the time, and then you can claim it. Right? Similar to just now I mentioned those R&D and all that, right? So you have to do a bit of work here. Okay, the other one will be on tax deduction for those who are buying new assets, plant machinery. Under normal, if you are aware, under normal deduction, it's either a one-time deduction for certain qualifying assets, like those IT related kind of asset, you get a deduction in the same year. Or in some non-IT or automated related asset, you have to deduct it over 3 years, spreading it over 3 years. Right. So what happened now is for the next 2 years, they allow for those assets that you have to the so-called claim it over 3 years. They now allow you to claim it within 2 years, shorten the period. Right. Instead of claiming over 2 years, claiming over 3 years, now you claim it over 2 years. First year is 75%, second year is 25%, right? So it's for you to opt lah, but once you opt in, you cannot opt out already. So it depends on your company profit situation, right? So if you have a lot of profit this year, then this deduction is good for you because straight away you can claim 75%, rather spread it over 3 years, which is about 33%. So away you get more deduction, lower your tax liability, right? But if you are making losses, then this really don't apply to you. I mean, whether you claim it now, in fact, in some situation, if you have tax losses, we'll prefer you defer the capital allowance. Okay, so just speeding up the time frame you have for claiming of this capital allowance. Okay, similarly, if you are doing some refurbishment, renovation to your business premises, factory, your retail outlet, if you're in F&B or restaurant and so on, there are certain qualifying renovation expenses that you can claim. Not all expenses claimable, but certain expenses like, you do up a partition wall, change the carpet, things like that, painting or not, you're allowed to claim. But designer fee are not allowed. Or you get engineer to apply for some very major A&A work, also not allowed, right? So only those like change of carpet, painting, partition wall, things like that allowed, right? Again, currently you have to claim this over 3 years, capped at 300,000, but now you can claim it within 1 year, right? Again, this one you need to look at your tax profit situation. If you have a lot of profit, then it's good to claim it within 1 year to maximize the tax savings.